So today has been quite the seesaw day. The CPI came out, the Consumer Price Index, which is inflation. Now, I want everybody to know, I'm coming at this non-politically. My good friend Mo, my counterparty here, he's in Mexico, so I can tease him all I want right now and he can't defend himself. Guys, there's nothing that the president can really do. I shouldn't say nothing, but the cost increase that have occurred in the last year or two are not President Biden's fault. I want everybody to realize really quick, I am not a Democrat at all. I'm not a Republican. I'm a libertarian. I believe in free markets. This inflation is 1,000,000% a result of the fact that 2 years ago, we were printing money like crazy to keep people home. So they wouldn't get, when they lost their jobs, stay at home, here's money. When you put a lot of money into the economy, you have price increases because a lot more money is chasing fewer goods. On top of that, when you give people money to stay at home and not work, they now require more money in order to work. So when wages go up, inflation occurs. This is not political. Either party would have done it no matter who was in office. It just happened to be Trump in office. And to give credit to Mo, who literally wants to have Trump's child, Mo will sit there and say, yeah, Trump should not have done that. But remember, it's still politics and they still want to support themselves. And they know that if you give people a lot, they will vote for you. Both parties realize that. As an example, the Republicans are now putting into the House a bill to have a national sales tax instead of income tax. I am 1,000,000% in favor of this. My question to Republicans is, where was this then when you guys were controlling the House and the Congress? Where was this then? Now, all of a sudden you do it. Why? Because you want to look like strong guys here because you know it's not going to pass. So anyway, that's my political statement. The reason I say I don't want to get political is I'm bashing both sides here. They're both idiots. CPI has nothing to do with President Biden. Now, the positive on things for CPI, the costs in December decreased 0.1%. So I'm pulling up here the actual consumer price index. But the issue we have is eggs are up 60% last year. Butter's up 31% last year. If you're an average family and now you're paying almost $5 for a dozen eggs versus $1.80 before or whatever the price was 2 years ago, that's a problem. That's absolutely a problem. So whether you're a Democrat or Republican, it does not matter. It's still affecting you greatly. But this is why on this channel, we talk about living well within your means and saving a large chunk of your money. No matter what income you make, you can still save money. There's still things you're wasting money on. Keep money aside for things like this. I don't believe in a rainy day fund. However, if you need to be able to sleep at night, you should have a rainy day fund. Rainy day fund will cost you money in retirement, but it shouldn't be avoided to don't go spend money. It should be avoided to go invest more in your future. CPI came in at 6.5% versus 7.1% for the 12 months ending December 31st versus the 12 months ending November 30th. That's a nice decrease. And like I said here, there was a negative 0.1% in all items here. This is right off the Bureau of Labor Statistics or whatever it is website. Now, the key items though are, look at energy right here. Fuel oil down 17%. I think I read somewhere that excluding like fuel and all that stuff, inflation was still up 0.3%. Now I gotta go find exactly where I read that because I just came down to do this video. So there still are costs, but it is nice to see that fuel costs have decreased because everybody has to get to work. And it's nice for people who are trying to get to work when they see a 17% decrease in 1 month. Now, keep in mind, in October, it was a 20% increase. These things offset each other. It's a long-term trend here. The 12 months ended December was a 41% increase. So even that 16% decrease is still still very expensive relative to the end of 2021. Now, what did this mean? Well, the market did a lot of weird stuff today. If you look right here, the S&P is up. Oh, it's actually even now. Oh my gosh. Let's look at the S&P today. It's crazy. Can we even look at one-day chart over here? No. So today, the S&P was down 0.75 or 0.8%, up 0.75 or 0.8%. Now it's even. That is So 1.6, then back. That's a 2.4% deviation from starting to low to high to where it's at right now. Guys, we have no idea where we're going here. When I see that kind of lack of direction, I was talking to Mote, I was like, man, there's no direction. He even joked and said, I can't even trade. I mean, I don't know what things going, what trends are happening and all that stuff. Guys, we are in the middle of a bear market, or the start of it. Now, yes, I know we hit the technical definition of a bear market, blah, 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 but we still have massive overvaluation. When you look at my stock market to GDP indicator, we are at 65% overvalued today. Does that mean you should go sell everything? No. You still dollar cost average, because as time goes on, valuations go up as GDP goes up. All right. And you're trying to save for retirement. You don't know what's going to happen in the future. You need to get in the habit of saving month in, month out without question. Don't even think about it. Money in the account, buy the S&P. Money in the account, buy the S&P. When you wake up at retirement, you're probably going to do pretty well if you have a long enough time horizon. How long is that? 20 or 30 years. Now, if you're 60 right now and you're worried about retirement, different story altogether. But luckily, our average viewer is 25 to 45 years old. So you probably have at least 20 years, upwards of 40 years for our average viewer watching this channel. Inflation is going to happen. In your lifetime, we're going to see bouts of inflation. In 2008, inflation hit 10% because gas prices skyrocketed and came right back down. But the last 20-some years have been very low on inflation. Why? I don't know. I really don't know. But I do know that eventually this money printing has to catch up. Eventually, when you print so much money, it has to lead to higher prices. There are benefits to higher prices. Your home can go up in value a lot faster with inflation. Why? Because the labor to build your home and replace it, and the materials as they go up in price, will make your home worth more money. Because if your home is sitting here and you paid $300,000 for it, let's pull up a screen here. If you paid $300,000 for your house 3 years ago, and that house now would cost $450,000 to build, exactly as is, please don't tell me your house is worth $300,000 anymore. Now, maybe it's not worth $450,000 because this is a brand new house and you can make a lot of different selections, etc. But you're telling me your house isn't worth $400,000? I don't know what it's worth, but it's got to be worth more. Now, we also have much higher interest rates now than we did 3 years ago. So that'll affect things. But in the long run, things will even themselves out. Go back, and I'm 41 years old. I was born in July of 1981. If you go back to July of 1981 and come to today, how many bad things have happened to this economy, to this world, to everything? And guess what? This is how the world and the US have gone. Just like that. Along the way, it was this. But overall, this is how the world went. But the problem is we get super excited about this and get super depressed about that. Take your step back. Look further back. Look at this big thing right here. And guess what? The world's likely to do the same thing from here on out. Are there headwinds? Yeah, I don't like the fact that we print money like crazy. I don't like the fact that everybody prints money like crazy. And eventually, something will give. What's that going to be? I don't know. But that's why we teach on this channel being conservative in your investments and understanding that every investment is the present value of all future cash flow. And when you buy something, you want to make sure you buy it with ample margin of safety to account for the things that you don't know could occur out there. Because we don't know. That's the key of what we're trying to teach here. CPI, I do these videos because people like hearing about CPI. But I'm going to tell you right now, CPI, if you save adequately and don't overspend, CPI won't affect you that much. Now, you might sit there and say, well, Paul, what about the people who, I'm not trying to say, there's extremes to everything. And there are people who make very, very little income and it's going to affect them greatly. But over the last 50 years, as Munger says, every single person in this world has a better life today than they would have 50 years ago. That's an absolute fact. Now, you look at all the stuff we have, all the technology we have, all the food we have, everything that we have out there. You know, I joke, I'm from the Middle East, and I joke in the US, like I look at the Middle East, if I see a picture of a bunch of Middle Eastern people in Iraq, I can tell you who's rich and who's not. Can't necessarily do that here in the US. That just shows how economically powerful we are. That literally, Nick is sitting there behind the counter, and if you just looked at us right now, I basically dress like that on the weekends, or even for work a lot of times. I just wear this stuff for the videos. I dress the way he does. So if we sat next to each other, you wouldn't be able to tell who's got the money and who doesn't. That's a good thing, but it comes at a price. Everything comes at a price. And that's what I'm trying to encourage you to understand. When we do these videos and when we talk about CPI and things like that, just remember these as a way of saying, well, CPI jumped up pretty fast and it really hurt me before. Use it as a learning lesson. Use it as a learning lesson for the future. Okay, maybe I do want to have that rainy day fund. I don't believe in rainy day funds, but I believe in using a credit card as a rainy day fund. But if you don't want to have a credit card, don't do that. But exactly like I said, everything comes at a price. In order to save up a 6-month retirement account, you are going to sacrifice retirement money down the road because you're taking money out of today's market or the ability to buy and have it grow for long periods of time. Now, maybe with overvaluation in the market, it might be a good time to do that. But if markets were low, you're taking away those dollars. Everything comes at a price. Inflation's up. That sucks. But your wages are going to go up in the long run because of it. Your real estate's going to go up in the long run because of it. There's no such thing as only a good thing and only a bad thing. It's just how you look at it. And CPI came in at a negative number in December. And if it was Trump in office, the Democrats would be saying, oh my God, he's so delusional. And Trump would be saying, look at this, our inflation's lower in December. And I'd be like, here we go. And Modi would be saying, look, it's lower in December. Guys, it's still higher than it was a year ago, but the fact that it went lower, great. And by the way, we don't want negative, over long periods of time, you don't want deflation. But we just want moderate inflation over long periods of time. But you saw on this list how much things fluctuate. Things fluctuate, guys. This is all items. 1.3, 0, 0.1, 0.4, 0.4, 0.1, negative 0.1. It fluctuated between negative 0.1 and 1.3 all in the last 7 months. Come on. That's going to happen. Look at these fluctuations. Energy services, 3.5, 0.1, 2.1, 1.1, negative 1.2, negative 1.1, 1.5. From a fluctuation of negative 1.2 to 3.5%, 4.7% fluctuation. That's a lot of fluctuation for 7 months. But over a long period of time, over the last year, it's been 15.6%. So we're not even seeing all the garbage in between. So guys, if you like what I'm saying and it makes sense to you, I'm just trying to come from the approach of what's the other side say about this in terms of how should we really look at it? When it comes to valuing businesses and stocks, this is the channel for you. So subscribe. We sit here and talk about them. In the same approach, I look at CPI. Thanks very much for your time, and please subscribe to the channel.